What's up, everyone? So this is going to be a follow-up to my previous video, just to recap what we spoke about in the previous video. So to start, I showed this portion of the chart, and I explained that due to the fact that the negative daily velocity had been receding throughout the entire time period that GME was making, a sideways move, told us that sellers were losing control. We can see that in the fact that the negative daily velocity kept getting better and better and better for us. So we knew that sellers were losing control, and it was only a matter of time till price broke out. Then we had price finally pop above the hourly trigger, make this nice move up, and price was also able to finally break out of the daily trigger. So the daily trigger had been acting as resistance for this entire time period. Ever since August 18th, you can see how price was pretty much pinned below the daily trigger. From May 25th, we were pretty much above the daily trigger and had really nice movement to the upside. But ever since we were below the daily trigger, we just had sideways pinning and some nasty downward movement in the end of the month of August, leading into September. But now things are finally starting to look a little better. So to recap, I also spoke about the day trader chart that GME was sitting in a tight 3-trigger cluster setup. So let's bring that on right now. 1 second. So remember, 3-trigger cluster setups are really powerful setups where all 3 triggers cluster together to form a cluster. And when price breaks out in one direction or the other, that's when we get these strong trending moves. So let's take a look at it. So here's where the cluster happened, and Friday morning, October 28th, price broke out to the upside. And I also want to dissect this graph a bit, but you can see how beautiful the move up was. I think GME went up 8% on the day, but 3-trigger cluster setup and then constant upward pressure the entire day. So let's break this down, and I'm just going to show you guys quickly how we managed our call position during this time period. So for one, the simplest way to play it, if we just remove everything else, you can hold your call position, or at least if you have further dated calls, until the 1-minute trigger crosses back below the 5-minute trigger. And you can see the entire day on Friday, the 1-minute trigger never crossed below the 5-minute trigger, right? The 1-minute trigger is always on top of the 5-minute trigger. And so technically you could have held your calls all the way into close. And you can see you actually would have done pretty well that way. But when you're playing with weeklies, you got to be able to get out early and get out at the top of each move. So let's figure out how we could have done that. So for that, we're going to need velocity. So first, let's track our 1-minute velocity. Okay, so here, when velocity just goes bananas like this, so we call this a capitulation print. So when the velocity just swallows the previous bars, it means that it's definitely going to need some cooldown time. And so whenever you see just massive bars like this completely swallowing the previous bars, that usually is always a good sign that price is going to need some time to pull back. So here's one way you could have gotten out, and then of course you could use the 5-minute trigger to buy back in with a stop loss right below the 5-minute trigger, and you would have done really well in the next move up. But let's say you didn't get out here. So was there another tell? So we spoke about divergences, and 3 divergences usually mark a reversal. So here was your velocity high of the day. The 1-minute velocity was 0.122, and price was 27.84 at the time. Over here, price makes your first new high, 27.96, and the 1-minute velocity is clearly a bearish divergence because the 1-minute velocity does not make a new high with price. So here's number 1. And here, when price moves up to 28.27, the 1-minute velocity is still nowhere near as high as here, and that's your second bearish divergence. Now again, when you're watching a Nimoy, when you're trading this live and you have calls, once you see 2 bearish divergences, what you're doing is you're waiting, or at least the way I do this is I wait for a third high. And as soon as the third high comes, when velocity does not match here, I know that it's my magic number 3 bearish divergences and that a reversal is about to start. Doesn't mean price is going to come crashing back down, especially if we have pretty solid hourly velocity. We're not expecting price to come crashing back down at all. But if I'm holding weeklies, whenever I get when I see 2 bearish divergences, I'm waiting for one more price high, and that's when I get out. And you can see, using that method, we're actually able to sell near the top of this entire move. So just to recap, here was your most extreme print to the upside. You have 1 bearish divergence, 2 bearish divergence, and you're just waiting for one more high to get out of really short dated calls, if that's your preferred method. That's how I use a Nimoy to play call options. If we take a look at the 5-minute velocity, we can see that the 5-minute velocity agreed as well. So here was your most extreme print to the upside. And price at the time was 27.5. First new high, velocity does not make a new high. That's 1 bearish divergence. Here's your second bearish divergence, and here's your third bearish divergence. So 3 bearish divergences in the 5-minute means that that price wants to come back down to the 5-minute trigger, which is right here. Now you can see that the 1-minute stayed above the 5-minute the entire day. So if you're using a more, stable approach where you're not trying to get out at each price high, but you're just trying to stay in your position with a stop loss below the 5-minute trigger, you could have done really well as well. So for example, let's say you entered off the 3 trigger cluster break, you would have entered at about, $26. And then if you're just watching price movement and you have your stop loss right below the 5-minute trigger, then you only would have first got stopped out here at $28. So still a really nice $2 move you could have caught. So, a couple of ways to use an EMO. If you want to be really quick and active, you look for the divergences into the highs and you can get rid of, calls there. And second way to use it is to just wait for price to break under the 5-minute trigger to get rid of calls. And the third way to use it is to wait until the 1-minute trigger fully breaks down below the 5-minute trigger. All depends on the time frame of your calls. So that's how we get in and out of call positions using an EMO. But most importantly, what's coming next for GME? So we spoke about the weekly velocity in the last video. And we said that the weekly velocity has been getting better and better for consecutive 5 weeks. And this tells us that price kind of wants to come up to attack this weekly trigger. And sure enough, on Friday, price came really close. Now, let me zoom all the way in on the weekly velocity print for next week. So this whole time we're dealing with, some pretty nasty weekly velocity, but the weekly velocity last week was negative 0.41. And going into this week, it's negative 0.17. So because price and velocity is calculated at the end of each week after the weekend closes. So if price moves up into the weekend, it's going to greatly help the weekly velocity. And price does not move up into a weekend unless they're not really fully in control. Because if they were, they'd want to close price on a Friday as low as they can to make the weekly velocity even worse, which will contain price even greater for them. So GME definitely did an excellent job repairing the negative weekly velocity, meaning that last week, if price would have attacked the weekly trigger, it would have been almost an automatic rejection because look how strong the negative weekly velocity is. And the stronger the velocity, the stronger the trigger will hold as support or resistance. But now coming into this week, we have a much less extreme negative print, right? This is not going to hold. With this print, the weekly trigger isn't going to provide as strong resistance as it would have here. But we are still dealing with some extreme negative monthly velocity, right? So the monthly velocity is the worst we've seen in a really long time for GME. And with all this negative velocity, this is the kind of price movement that we've had, really strong downside negative velocity, and price was barely able to budge throughout the entire month of October. But the month ends on Monday. And so as long as Monday, we get as close to 29.98 as possible, GME can repair the monthly velocity more than half, meaning that the monthly velocity print here is negative 0.37. If GME even stays around here or moves up even closer to the monthly trigger, going into November, the negative monthly velocity is going to be a lot less negative, meaning that if GME is able to attack the monthly trigger, we won't be expecting the monthly trigger to act as extreme resistance. Rather, maybe it'll pin or come down a bit, but it's not as bad as it would have been if we would have attacked the monthly trigger during the month of October, in which case we'd almost automatically expect a strong rejection at the monthly trigger. We also had something very important happen for GME towards the middle of the day. We had the hourly trigger cross above the daily trigger. Now, one thing that I will say is that there's almost always a counter trend move back down to the hourly trigger after these kind of crosses before price continues moving up. So just because the hourly trigger crossed the daily trigger doesn't mean price is about to explode to the upside. Usually, 9 out of 10 times, we see a counter trend move back down all the way to the hourly trigger or even the daily trigger, and then price starts to move up. You can see even exactly when we got the trigger cross is exactly when price started to make that counter trend move down. So don't be alarmed by a retest back down to the hourly and daily trigger because it's very normal. But I will show you what usually happens after the hourly trigger crosses the daily trigger. So let's bring up bbby for a minute. So now this doesn't always happen, but you could see where the hourly trigger crossed the daily trigger, and you could see this really nice price movement that followed. So that's one example. Bring up AMC as well. So AMC, you can see where the hourly trigger crossed the daily trigger, and for July and August, price moved really strong to the upside. So the hourly trigger crossed the daily trigger, and then we got this really strong move up. Let's take a look at SoFi as well. And obviously there are hundreds of examples, but I'm just going to show 3 so you guys get the idea. So here's SoFi. You can see the hourly trigger cross above the daily trigger. Price actually comes back all the way to the daily trigger, which is, very normal. And then we get this really sharp move to the upside. So it is very important when a stock gets that cross. It's a very bullish cross. if we take a look back at GME again, we can see when they crossed down, which was right here. Here's where the hourly trigger crossed down, and we had this, really bearish period because of the trigger cross. Trigger cross told us it was coming. Now we got the trigger cross to the upside. So, this is a really bullish sign for me. If I would see this in a different stock, I'd be looking to take a long position. Thankfully, I'm already long GME. So for this week, if I had to give a single forecast, I'd say that, there's a very good chance that price is going to need to make a counter trend move back down to the daily trigger. However, we do have, as you can see, the predicted print for Monday is strong daily velocity, 0.13. With strong daily velocity, we expect the daily trigger to hold as support. So an excellent dip buying opportunity for me would be if price makes this counter trend move back to the daily trigger, and because we have positive daily velocity, I'd already be buying at the daily trigger with a stop loss just below, maybe at 26, because I know that there's a very good chance that the daily trigger will hold as support due to the positive daily velocity. Now, if we attack the monthly trigger on Monday, 29.98, then there's still a really good chance of rejection because, as you can see, the monthly velocity is still really negative. But if we close the month, if we close on Monday as close to 29.98, then we have a really good chance of being able to break to the upside. Now, again, if price breaks through 30.46, if that happens, we have two things. We have a weekly trigger, monthly trigger airplane, because price will break above and then the weekly trigger will start curling up off the monthly trigger, like this. So the weekly trigger came down to the monthly trigger, and then it'll start curling up. And airplanes with triggers are really powerful setups. Just one quick example is SoFi, which had a hourly trigger, daily trigger airplane. And you can see the beautiful move that price made. So here was the airplane right here. So the hourly trigger came down to test the daily trigger, and then came up off it, and price exploded to the upside. So that's called an airplane when a trigger comes down and bounces off. But for GME, if the weekly trigger comes down and bounces off the monthly trigger, we can expect a really powerful move to the upside. Another thing is we discussed two trigger clusters, but price breaking through the weekly and the monthly trigger clustered together like this is still a two trigger cluster, which is still a really, really powerful setup. And price can explode to the upside off a two trigger cluster like this. So we have to monitor where price closes on Monday. The closer to the monthly trigger, the better. And we have to monitor the hourly trigger, daily trigger cross, and we have to expect some sort of counter trend move. So what I'm doing is, I'm flat right now. If price breaks above the weekly trigger, then I'll be long calls with a stop loss just below the weekly trigger. So if I see price at 30.60, let's say, then, I'll wait for it to prove that it can stay above, and then maybe I'll go long calls. But because of this overhead, I'm flat now. Price is kind of, you could even see it. You could see prices now getting really tight and really clustered in between all four triggers. A break up should send price flying, and a breakdown is not going to be bullish for GME. So I'm waiting. If I get a perfect counter trend move back down to the daily trigger, I'll go long calls and I'll ride it right back up to here. But let's see what happens as these triggers get clustered tighter and tighter together. They could even form a four trigger cluster. If GME breaks to the upside out of a four trigger cluster, that's when you could get absolutely parabolic moves to the upside. So right now, we just have to wait to see which direction price is going to choose, either above 30.46 or below 26.36. We do have good daily velocity, so we expect the daily trigger to hold, and the weekly velocity keeps receding, keeps getting less and less negative. So that's a really good sign. So let's see where we close Monday. Let's see what the new monthly velocity print is, and that's when I'll give the next update. Good luck, everyone.